So when they sold right there and then when they bought right here, they're running into drawdown because they're running in sales right there. So what happens right now is price reaches to a satisfactory level, right? And then they take profits, they take some partials, then they start the process again, right? They start generating the patterns. Double top right there. All right, the market starts pulling back. What do we have right there? Double top. Who do we have right there? Sellers. Oh, double bottom. The market is making a higher low. Who do we have right there? Buyers. Right? The market comes in, stop loss of the sellers, takes in new buyers. The market goes down, stop loss of the buyers, takes in new sellers, and stops out everybody. Right? Then the market comes in just before this move, which is usually going to be called an order block or supply and demand zone, which we're going to be covering a little bit later. And then they start accumulating again. Boom, 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 boom. And then again, they launch a new fake move into the previous fake move. But with the new fake move, they're going to close the previous one at break even. And again, if they launched sales right there, what do they get right now? Buys. And this is exactly what they're going to be doing. They're just shifting their orders to buys and then usually see the market massively plummet into the highs. So in this case, they also use their own liquidity from here. And of course, they still generated some right there. So hopefully this little theory makes sense. Again, it's a little bit complex. And again, I don't want to get way too detailed about it, but I just want you to understand how it works, right? So this is the basic supply and demand zone theory. This is when you have usually an accumulation, manipulation below that, initiation outside, then you come back, retest the zone, and then the market usually goes in the overall direction. This is one type of supply and demand zone I'm using, and there is a second type. This is pretty much the rally base rally, drop base drop, right? So what happens is the market, this is usually happens after this. So after this develops, this is how we see usually supply and demand form as the market is in a nice uptrend or a downtrend. So we have this very nice push. The market pulls back and start generating like a little bit of a pennant, a little bit of a triangle, right? So people start selling right there. People are looking at this triple bottom. They start buying. What does the market do? They launch a fake move, right? So what happens is stop loss of buyers. New sellers enter the market as well. On the move up, they take out the stop loss of the sellers. They take out all the buyers. Then they return back to their fake move, right? And then they launch again. Exactly the same situation right there on the sell side. All right, so study those two examples. This is the theory. Here's a real example, okay?
Living in Dubai.
All right, so study those two examples. This is at this precise moment right there, banks wanted to buy that 1 million lots, right? So what they do, again, the market looks like it's bearish, but there is probably something on the left, right? We don't know. We're just focusing on pure price right there. So what the market does is, again, it does this, right? Boom, 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 makes a little bit of a choppiness. Then it sharply moves to the downside, breaks structure down. If there are people that are buying right there, they're all stop loss, and there are people also selling right there with a stop loss above here. Then the market goes and creates a trend change. So what is this, guys? This is market structure. Trend change. And then again, so this is their fake orders right there. Then the market pushes up and then starts to consolidate, right? And usually the Asian range, which we're going to be covering a little bit later, is a really good example of building liquidity. So the market pulls back, consolidates for a little bit, tricks buyers to enter right there, tricks sellers to enter right there. And what they do is they launch again another fake move to the downside. Where? Exactly into the previous one. So they close their positions that are on the sell right there, turn them into buys, and look at the expansion. There is the expansion. And then again, so this is the first example that I showed you. So this is the first supply and demand zone, and there are the second one. So then you have a base, higher low, higher high, pulls back into the base, goes on and makes a new higher high. There is a new base, push, pull back, right? Pulls back into the base, makes a new higher high. Then here for a brief moment, the market needed lots of liquidity. So then they gave this big stop hunt to the downside. And again, this happens, right? So how do you know that this is a stop hunt? Because according to me here, we had a shift of market structure, but then the market immediately came in and shifted to the upside. So then I can say, okay, well, yeah, this was the liquidity grab. Right now we're bullish again, and I will be looking to flow with the market bullish as long as it goes. So that's the first example. Hopefully it's clear. There is another one, right? This one is also a very nice textbook one. So again, guys, pause on those charts, study them carefully. I'm going to be giving you away the PDF as well, so you can watch this at your own time. Again, bank right there decides to buy something. What they start doing is they start making a range. And usually, once again, as I told you, the Asian range is a really good confluence for that. They consolidate. Then what they do is they launch this fake move. So what is happening right here, a lot of people that are buying, this support, they get stop loss. A lot of people on this breakout are entering also into sells. Okay, so there are a lot of orders being transacted just after we broke this level right there. The market pushes down, we get a little bit of an accumulation, and you can see, boom, the market expands. What happens is we have a trend change. So the market aligns bullish. Okay, then we pull back into the zone. And you can definitely be looking to take a trade right there. Absolutely. Right, then the market massively initiates outside once again. And then again, as I keep saying, the market is not perfect. So we still have this fake move. And again, we don't know. So a big question you might have right now is, okay, how do we know when you have a range like this, where exactly is it going to retest? Is it going to retest the top? Is it going to retest the middle? Is it going to retest the bottom? We don't know. We don't know. And this is why you should be taking the average. But what I show you in this example is that on this overall sell to buy, I'm going to be showing you more examples later. We take like just a simple fib and we drop the 50% and look at where the market came in later. How did it come in? I want you to pay attention. How did it come in? It tricked all the buyers. It tricks all the buyers from here as well. Massive move into the downside. What is this? It's a fake move. Right? And then what happens immediately afterwards is they potentially close their positions right there, get all of their liquidity, massively pushes up. What does it create? A trend change. So what is the market doing right now? It aligned bullish. What caused this trend change? You immediately track it back. This is our major higher low. And within that higher low, you have that fake sell to buy, right? You draw it in, and this is where the market comes in, closes the orders, and continues to push up. Okay, so there is a great example of that supply and demand. Let me give you another one, right? So there you can see the patterns right there, and you can see that it usually happens around the Asian range. We have a massive range right there. Again, what I told you in the previous lesson, what do we have above the range and below the range? Stop losses. There are people in shorts right there. There are people in longs, and on the breakout, you usually get also a lot of sellers entering. And this is what the banks want. They want the opposite order to what they actually want to do. Massive push. Again, you see how the accumulation happens right there. It looks like a lower high right there at the time. It tries to push down, launches even more orders, and then boom. What do we have is we have a trend change. Very good. What happens right there? Stop losses of sellers are kicking in. So this is what they want. And then again, what caused this trend change right there? What is this? Well, it looks like a base demand higher low, right? You can see the market actually launched the fake, pushed up, came into 50%, then it pushed up. And then again, it comes into the demand zone, creates a new base, pushes up, pulls back. Here, we didn't really quite reach the base. Then a massive push up once again, it pulls back, creates a higher low, higher high. Then on the way down, it creates a trend change, but you still know that you have this base demand right there. And you can see the market came in, reacted, came in again, and it's reacting. Okay. So we can see the two types of supply and demand right there in a couple of examples. We first usually have the first example when the market is accumulating, grabbing the liquidity of everyone,